US stocks continue to rally on Friday as investors are more confident about soft landing scenario. A deepening conflict in the Middle East could prompt fund allocation out of Europe and into the US. Morgan Stanley raised the view on the so-called cyclical stocks relative to safer defensive peers, noting on Friday's blowout payrolls data and expectations of more interest rate cuts from the Fed. Goldman Sachs boosted expectations for the S&P 500 earnings growth for the next year as solid macro outlook drives margins. The bank strategists upgraded their 12-month target for the benchmark to 63,000 points from 6,000. Companies in the S&P 500 are expected to report a 4.7% increase in Q3 from a year ago, according to data compiled by Bloomberg Intelligence. A low bar leaves companies more room to beat the forecast. Since 1971, the S&P 500 has posted an annualized return of 15% during periods which the central bank cut rates. Those gains have been even stronger when the rate-cutting cycles hit non-recessionary periods. On the flip side, CTAs are expected to sell US stocks even if the market stays flat in the next month, according to data from Goldman Sachs, and volatility control funds no longer have the room to add exposure. The S&P 500 traded close to its record high, but a double top pattern suggests it will more than likely move sideways in the near term. The support lies around 5,680.